Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, February 16th. Okay, traders, hope you guys had a nice 3-day weekend. Found a few ways to feed your brain, get recharged. Hopefully you did something nice on Valentine's Day with your significant other and your family. I had big plans of catching up on some stuff in the markets, but I got sidetracked. I did a few home improvement projects that turned out pretty well, so I'm feeling good about that. So anyhow, let's dive into the short trading week. Don't forget we've got February options expiration on Friday, so keep an eye on any short dated positions that you have. It's about 7 o'clock as I'm starting the video, and futures are up nicely across the board. In fact, the only red that I saw was gold down a couple, $3 or $4, which isn't anything new. Gold has been in a relative downtrend, but I noticed silver was up about 1.3%, so that's interesting. Copper was up, oil's up, all the equities are up, so it looks like a bullish start to the morning. What I wanted to do is, before we dive into the charts to get kind of caught up where we're at, I wanted to take a look at our oscillators, which we haven't looked at in a while. This is the Naimo Nyse Mcclellan oscillator. You can see here that we've are currently in the midpoint of the range between plus 60 and minus 60, which are the levels where we need to be concerned of being oversold or overbought. This was our tag of the 50 down here, the 50 EMA, when we had that little swoon a couple of weeks ago, and you could see that was a good buying opportunity. So Naimo is a great kind of benchmark gauge that you should keep your eye on periodically to see where you're at. While it's in the middle, not at extremes, it's not very useful, other than this, just inform your trading that you're not overcooked to the downside or the upside. So let's look at the comparable oscillator for the Nasdaq. You can see here, this was our swoon a couple weeks ago. We powered out of the hole right up to the top and have since backed off a little bit, right in the midpoint of the range. So from that perspective as well, on the Nasdaq, not overdone or overcooked. So from that standpoint, we're in good shape. Let's jump into the SPY. I'm going to zoom out to the daily charts, then we'll go down to the 30-minute charts for active traders. Here's the SPY daily. Here's an uptrend line off of the March lows, going way back. And you can see price is above all the moving averages, above the 8-day, above the 20, 50, and of course the 200, which are all bullishly stacked. So, I mean, you can't be bearish here. You can be cautious because of the extended run, but certainly not a time to be outright bearish. I don't want to see you trying to take pot shots on the short side, trying to be a hero, pick, top tick the thing. That's been a losing trade the whole time. So stay long, modulate your risks. Don't go, ludicrous FOMO, 2,000% leverage long with everything you got. We'll eventually get a pullback, and that'll be your opportunity to reload. So stay bullish, keep your risk in line with what you're comfortable with, and let's see how far this run can take us. Jumping down to the 2-hour, we've had this nice 2-hour uptrend channel. We're going to gap higher this morning up above the midpoint line. I would be cautious this morning from the standpoint of whenever you've got a gap higher open, there's always that possibility that that gap will just be too darn juicy for traders not to sell into, take the weekend profits, that kind of thing. So be careful on that gap open. If you see you get a pullback that closes that gap, I think that would be a good opportunity to try a long after that gap is filled this morning. But from this intermediate time frame perspective, if price can, will pop up here but pull back and then stay above this midpoint line, the midpoint line of the channel often acts as support and resistance. You can see here that once we lost it and then recaptured, this midpoint line has acted as resistance. Even though we've been grinding higher, it's been a resistance level. So now if we pop above but hold that level on the way back, or retest on the downside, then we have the opportunity to operate in the upper half of the channel like we did down here for quite a while. And if we go back in time, you'll see that the midpoint of the channel often acts as support and resistance. So that would be a nice thing if we could jump to the upper half and then operate in that range. 30-minute chart, we had been thrashing around most of last week in a pretty narrow range between 391.50 and 389.50. I boxed that in, as I often do when we have a trading range. And then what I did was, because of the breakout in the last half hour of trading on Friday, dropped in the measured move, which is the width of the box. I just stacked the boxes. And so here in the pre-market, we are up in this 394, 395 range. Which is the expected move. We already talked about the gap, so I wouldn't be surprised if we worked in this new trading range for a while. And if you got a pullback, into the Friday close, or even back into 391.50, I think that would be a great place to try a long, because you've got this well-defined resistance level here that should become support going forward at 391.50. Qs, just keep grinding higher. Here's the daily chart. Price above all the moving averages, above the 8-day, 20, 50, etc. We've got this uptrend channel. We will open either just above this channel or just below, but anyways, we'll be walking along the top of this channel. We have not visited the bottom of the channel for a while, since the beginning of February. That was the swoon, which turned out to be a good place to buy. So we're going to need to watch it up here at the channel resistance to see if it has trouble, or if it just powers through and pops above. There'll be a gap there this morning also, so be aware of that. Here's the 2-hour, nice 2-hour uptrend line. Here you can see that we've been walking just above the 2-hour channel. This green line here is just to illustrate that we still have the bearish divergence that I continue to point out. It has not meant a thing so far, but just there as a gentle reminder that there is some bearish divergence. But notice here that the PPO is positioned for a high-level bull cross, and here RSI is positioned for a breakout above trend from this downtrend line. So those would be, bullish developments. And given that we're going to get a gap up this morning, this is most likely going to, execute that bull cross and then have an opportunity to roll up higher. And so on this chart, I would simply use the top of the uptrend channel as your first level of significance on any kind of pullback. And until that breaks, until price breaks back into the channel, all things should remain bullish. If price were to break back down below, then your first target is going to be the midpoint of the channel. Here on the 30-minute chart, really strong. I mean, this was surprising. This was a big final candle heading into the weekend. And remember, Peter Brandt, the market wizard technician, whom I respect a lot, says the most important 2 hours of trading in any week is the final 2 hours of the week, between 2 and 4 p.m. on a Friday. Especially gets extra importance on a 3-day weekend. So the fact that we had this very strong closing candle heading into a 3-day weekend, that speaks to the willingness of traders and investors to boldly be long into a 3-day weekend, not overly concerned about the extra day of weekend risk. So that's a risk on close. And now we've got in the futures, of course, over the weekend, we're set for a higher open. So watch the gap open. Things look bullish here on the Qs as well. And the same thing for IWM. Here's the daily. Price above all the moving averages. Price above the midpoint of this rather steep uptrend channel. IWM continues to outperform, as has been noted by myself and most other technicians, TV, etc., etc. So watch price as it gets up into this 235 area at the top of the channel. The top of the channel, you can see here, has contained price all the way off of the November timeframe when this thing started on the vaccine news. So when we get up here to the top of the channel, that would be a place to be a little bit concerned. And if you've been long, especially if you got long right here on this dip, might be a place to take a little bit off and see if we don't get a pullback, into the midpoint of the channel where you'd expect that to be support. Here's a 2-hour chart. Very steep uptrend line here off of that swoon. Pullback into 226 and actually a tag of this gap. That was a great buying opportunity. And I know some of the people in the trading room grab that first tag of the gap. Very objective place to try along, and they've been rewarded. Now this morning, I took a look pre-market. We're set to open right below 230, 229 and a half, something like that. Watch the backfill on the gap open, but if price takes out 230, that would be a place to definitely be long. That would be a place to move up your stops, move up your strikes, and do a reset at 230 at the prior high. And then that way you'll bank, any gains that you had and be able to, recalibrate your risk. And then you can use 230 as your pivot point. And here it is on the 30-minute chart. Not a lot to see. We had this little downtrend channel that started that has been invalidated on the breakout, and now we're going to be up here at 230 on the open, as we just talked about. That will be a great pivot point to watch today and in the days going forward. Let's run through FANG real quick. Facebook trading range between 265 and 268.50. Now we're between 268.50 and 272. You can decide, how active you want to be within this range. Pretty choppy trading, but, if you're comfortable with a $4 range, you can trade that. If you're looking for more of a swing trade, you can either get long down here at the bottom against 268 or wait for the breakout above, above 272 for a move up towards 276 and potentially 280. Apple, same thing. Wide trading range between 134 and 137.50. Bottom of the box, top of the box, bottom of the box. Now we're at the midpoint. I think it was up a little bit in the pre-market. If price can get above the midpoint of this range at 135.5, I think you can be long. Otherwise, you can just wait for a long above 137.50 and then look for 141.50. Not a lot of momentum during this consolidation phase, but notice got a little baby breakout on RSI, and you got a little baby PPO bull cross here in momentum. So watch FANG for a potential wake up. Tesla, nice study in technicals on Friday, had a fake breakdown below. And if you're looking to get long on Tesla, here was your buy when you recaptured this 800. You could have gotten long here, and then you got a really nice close. So if you got long against 800, just stay long, and then your target will be the top of the box at 880. So, if you wanted to get long and you missed it, I think this 810 would work pretty well as a pivot point as well. I've been watching Microsoft. I've been frustrated. I thought I had a couple of breakouts here. Turned out to be fake. We are set to open around 245.50, 246. What I'm looking for here is for them to backfill the opening gap, pull back into 245, and I would be interested in a long there. I still think this is going higher, and with this breakout here, if price can break out and hold, I think it can see 250 relatively easily if it can hold this breakout, and I'd be an interested buyer on any pull into 245. Amazon might be getting ready to do something a little bit more interesting. Let me point out the nuances for you. This was the swoon coming out of earnings. We've been working the free 50 club, $50 increments all the way down that have worked great. But now look on Friday, and the closing candle took out downtrend resistance. We got a baby bull cross here on momentum, PPO, and we've got a breakout on RSI. That's what you want to see for a trend reversal. And if you're interested in getting a long on Amazon, you've got a well-defined level here at 32.50. I think you can be long against that level. But certainly if price makes a move up here and takes out 3,300, I would be a buyer there if you're interested in Amazon, because you've taken out this downtrend resistance and now you've recaptured a key level. So I would get long against 330 and then look for 33.50 and possibly a run back up here to 34.20 at the prior high. So that would be a really nice entry point. And then you would have momentum coming back above the zero line, which would be very bullish. And you'd have RSI breaking above 50, which would also be bullish. So I really like that setup in Amazon. And with these names, they've been dormant here for a while, but as we've seen in the past, they don't stay dormant forever. There will be a moment where these pop, and maybe they'll be led by Amazon and Microsoft. I think those are the best setups, along with, let's take a look at Google here. This is another very bullish setup where we've got the gap up and quite a number of days here in consolidation, but it's not going anywhere. We've had a bleed off in momentum, but momentum bottomed out here at the zero line, which is bullish in itself. Looks like it's ready to curl higher. We've got a breakout in RSI. So if you're interested in Google, I'd be a buyer at 2075, which is the midpoint, or I'd be a buyer on a breakout above 2100. And I think you'll see a fast $100 there on a breakout above 2100, and then after that it's anybody's guess. But we had a target off the weekly of 2200 as a measured move target. Now that doesn't mean that it hits the target and reverses, but I think this is going higher. And if you simply did a set this up as a bullish flag, you've got a big impulsive move off of 1820 to 2100. So let's call that, what is that? For all intents and purposes, that's $300, right? 1820 to 2100. And so you could extend that flag from here, and you got something closer to 2300 as an upside target off of this chart. So I think there's a lot of upside. I would definitely have an alarm set at 2100 on Google. Netflix has been more or less grinding higher. I think you can be long against 555, 554, and see if you can get a push to 570. I think this 554 is your pivot point. Hasn't been doing anything really exciting, but I think this thing is getting ready, just like several of the other names, Google, Amazon, Microsoft, as we've discussed. Okay, let's do a quick recap. Everything is bullish, remains bullish. On all the indexes, we're above the 8 and 21 day. You can't be bearish when price is above all the moving averages. We even took a look at the oscillators. We are not overcooked to the upside. We're in the middle of the range. So from that standpoint, there's nothing in particular to be worried about. FANG, the Fat Man trade, looks poised to reawaken after a period of dormancy. Get your alarm set if you're interested in either trading those names or establishing swing longs in those names. I think we're at a juncture that they're very close to making some moves, and those moves may catch a lot of people unaware because they have been dormant and frustrating for quite a number of weeks and even months. So getting in early on that trade, if there's a rotation back into those Fat Man names, that could be an explosive trade. The only other thing this morning is, after a 3-day weekend with a gap up, don't be too, over eager to, jump right in. Let's let the market settle down, for 30 minutes or an hour to see if they backfill that gap. And if they do, then you've got a much more objective entry point than trying to, jump right in at, 9:32 this morning, where, you're kind of out in space with price with a gap below. That's a good recipe to get trapped in some profit taking from the weekend. So be careful about that. But that being said, everything looks bullish so far. Don't let FOMO overtake you. We've got quite a number of swing positions on that are working. So keep your risk profile in check and with what you're comfortable with. Probably not a place to be, leveraged to the hilt long. There will be a pullback eventually, and you don't want to be trapped. You want to have some dry powder ready to pounce on any quick pullback as if and when that ever happens. Okay. Thank you for spending some time here this morning with you. I hope that sets the table for you this morning. Getting back into the market, short week. Watch your February options that expire on Friday. Don't let anything slip through the cracks. If there are positions that you want to maintain, I would be looking to roll those out into March or April, depending on where you want to position yourself. There's no need to let that run all the way until, hours before expiration, because your vulnerability will increase on that position. The closer you get to expiration, the value will jump around a lot. So if you're committed to the position and it's working, I would be looking to roll that out in the next day or two on whatever positions you are definitely going to hold past February expirations. Okay, so if you're new to the channel, thank you for visiting. If you've heard some things you like, please register for the channel and subscribe. Hit the alarm bell. You'll get notified of all my content. And then over in the show notes are links to the blog site and a place to register for all my content, where you'll get a nice email each and every time I publish information. You'll get that right to your inbox. You won't miss a beat. And also you get an invite to our trading room, which remains vibrant and growing. A lot of good guys, a lot of great ideas. And even if you can't participate in real time, you can certainly check out the posts and the ideas at your convenience after hours. Got a lot of members that do that, and they can very efficiently just scroll through, write down some tickers, do their own investigation, and see if it's something they want to participate in. So, all right. Well, have a great start to your trading week, and we will talk to you soon. This has been Chris Buss with Traders Profit Compass. Talk to you next time.